Exchange at 25 Broad, sponsor of this webcast, invites you to visit our remastered model residences. And also sponsored in part by Trump Mortgage.
Good day. I'm Abby Overton, and this is The Real Deal. At the top of the news, a new 421A affordable housing reform law was passed by both houses in the state legislature. Joseph Moynihan is in contract to buy 295 Madison Avenue for around $180 million. And apartment REIT Archstone Smith has paid $169 million for a residential building on the Upper East Side. That and more on The Real Deal webcast this week. But first, some highlights from this week's interview. We turn to that segment of the New York real estate market that continues to create a lot of news. Real estate investment trusts, or REITs, companies that offer public securities and make money for their investors through real estate property. Already 2 REITs are in the news this week, and many of you will remember earlier this year Blackstone's monumental $40 billion buyout of equity office properties. Real Deal reporter Jen Benepe spoke to Zacks senior REIT analyst Greg Sukenik in Chicago.
Can you talk about the overall performance of REITs in the first quarter of 2007? How will this affect New York REITs?
Well, so far this year, REITs have underperformed the broader market. Overall, REITs are down about 5% or so this year.
What about the New York REITs specifically?
Private equity continues to focus on REITs with assets in the best markets. Notably, one of them is New York City, which has been performing very well compared to other urban centers around the country.
Archstone Smith is buying 295 Madison Avenue for about $100 million. Can you talk briefly about their strategy and what's next for this company?
Their strategy has been to buy the best assets in urban infill locations, which are very hard to add new product, which enables rent growth. And this strategy has really worked for them in the past.
For the full interview, click on the link below. And now for the news. A 421A reform bill passed both houses of the legislature last week. The 421A exclusion zone will be extended to include large swaths of Upper Manhattan, Brooklyn, and Queens. It currently applies only to Manhattan between 14th and 96th Streets. In the area covered by the new law, 20% of units in new developments will need to be affordable to a family of 4 earning $42,000. Joseph Moynihan is in contract to buy 295 Madison Avenue for around $180 million, according to sources. Moynihan tried to buy the 40-story Art Deco building 20 years ago from the family of the late Sarah Carrane. Apartment REIT Archstone Smith, which Tishman Speyer and Lehman Brothers purchased last month, has paid $169 million for a residential building. The Carmog at 303 East 83rd Street carries rents between $2,900 and $4,800 and was sold by Lloyd Goldman, the president of BLDG Management. SL Green Realty Corp. is buying 16 Court Street in downtown Brooklyn for $107.5 million, the REIT's first acquisition in Brooklyn. The 38-story 1928 vintage Class B building is the borough's tallest office tower. SL Green plans to modernize the building and revamp its retail. The Chetrit Group purchased 2 landmark townhouses on 76th Street for $8.7 million from Lenox Hill Hospital. In addition to the 110 to 112 East 76th Street addresses, Chetrit is purchasing 4 more from 114 to 120 East 76th Street. When the deals close, the company will have amassed 23,000 square feet of contiguous space at a price expected to total more than $25 million. Despite protests from community groups, a partnership of Acadia Realty Trust, McFarland Partners, and 2 smaller interests will build a 1.6 million square foot mixed-use project at the site of the current Albee Square in downtown Brooklyn. The partnership will purchase the ground lease for the 137,000 square foot city-owned site from Thor Equities for $120 million. Current plans call for the construction of 650 apartments, much fewer than the 1,000 that were originally planned. In testimony to the growing strength of the downtown market, luxury retailer Hermes opened a 4,000 square foot flagship in the financial district last week. The store at 15 Broad Street is expected to generate $20 million in sales in its first year. The Spitzer administration is considering a proposal to renovate and expand the Jacob K. Javits Convention Center that would cost $4 billion, or more than twice the cost of the Javits overhaul proposed under the Pataki administration, and among the highest prices ever paid for a convention center in the U.S. The new proposal would add 550,000 square feet of exhibit space and meeting rooms. Coney Island's Astroland amusement park will operate again next year rather than shuttering at the end of this summer. Councilman Dominic Recchia Jr. brokered a deal between the amusement park's operator, Carol Hill Albert, and the new owner, Thor Equities chief Joseph Sitt. Albert will pay the developer in order to operate out of the same spot in 2008. In other Astroland news, the park's world-famous Cyclone roller coaster turns 80 this week. Thank you for joining us for this edition of the Real Deals webcast. Remember to click on the link below for this week's interview. Please join us next week for the latest real estate news. I'm Abby Overton, and this is The Real Deal.